Hello and welcome and welcome and hello and hello and welcome. Of course, as I greet you, say greetings and salutations, my cell phone starts to chirp at me. Let's put him on silent, friends. Hello and welcome. It is Poco Moss. It's Danny Vegas here with you. Danny Deals has again struck with a severe case of malaise based on the lackluster price action of the SoFi stock. Guys, we are stuck here at $7, which might initially seem like a bad thing, but I'm going to try to maybe explain to you a little bit, Lucy, about why it's not such a bad thing. And with the level of shorting on the stock and just the overall, conditions of the market, other fintechs, Robinhood, Affirm, also doing pretty good. What we're looking for, guys, is sector rotation back into these fintech sort of neobank financial stocks. People want to imagine that they're victims. People want to feel bad for themselves. People want to feel singled out. People want to feel special. But the fact is, the SoFi stock price action has largely tracked other fintechs, other neobanks, other financial institutions. If you line it up with like ARKF and other things, the chart is it almost traces it. So us SoFi investors, I think, yeah, it feels like injustice. We're, want to shake our fist at the powers that be because the fundamentals of this company are actually really solid. The growth is solid. It's not spectacular. It's not new. It's not one of these companies that the growth is sort of taking off at an upward trajectory. If you look at the numbers management's putting out with SoFi, it looks like they expect the profits to take off at a very steep trajectory starting in 2025, I think timed with S&P 500 inclusion. And then you see the growth curve in terms of GAAP net profit really explode, at least according to management's projections, in 2026. If you think about it, bringing in like 2 cents a quarter now, if you look at their 2026 projections, the top end of that at 80 cents, they'd have to average 20 cents a quarter in GAAP net profit that year at least. And that's assuming, no more dilution. So in real terms, they'd have to make more than that if you froze the share count right now. But you're talking about 10xing the quarterly profits. People are only expecting 8-9 cents this year, guys. So, they're expecting basically 2 cents a quarter, 1 cent a quarter throughout the rest of this year, maybe up to 3 cents. Some analysts are calling for in Q4. But basically, why does management think that the stock and the profits are going to explode in 2025 and 2026? That's kind of what I want to talk about. I want to talk about timing. I want to talk about patience. Above all, I want to talk about why I hate you guys, why I hate retail investors so much. Because it's the decisions that we make as retail investors that feed money to the market makers and allow them to do what they do, which is profit off of holding the stock down, moving it sideways, running infinite little pumps and dumps. It's all those little things, we do sometimes because we are emotional, unstable people. People ask me, should I invest in stocks? Let me try to share my screen with you guys. You probably had enough looking at my ugly mug. Let's see here. Let's share that. Let's go ahead and move myself down over there. There we go, guys. Hello and welcome. Welcome and hello. Good to see you guys. Thank you, Not a Lurker J Money, for producing the show today. Work be damned. His boss can wait. Returders are in need of moderation. Everything in moderation. That's J Money's motto, and we appreciate him. The Returders are throwing around a lot of wrenches. I don't throw around wrenches. I got Alberto Bertie Avilés, and I got J Money, and that's it. No more wrenches. Unless you pay me, unless you bribe me, unless you take my course, sponsor, blah, blah, blah. Join my Patreon, join my OnlyFans. It's tasteful. It's tasteful nude content for the discerning investor. Okay, Danny, so far I have 0 paid members on my OnlyFans. You have to really search me out. Look for Fat Tennis Ninja on OnlyFans. It's a lot of fun, guys, for the whole family. Anyway, listen, SoFi stock, again, max pain at 7. The calls and the puts, the volume were both lined up right at 7. Did not expect this to deviate. If you are a covered call selling aficionado a la the Savage of Wall Street, you are very, very happy this week because, you didn't even have to flinch. Monday, it looked like, I think they pushed up briefly on Monday. I don't know, maybe 720. But yeah, that's what I say, guys. It only got up to 725, I think. But I always say if you're going to get weekly calls, sell them on the pop on Monday. That's all you're going to get because it's only downhill from there, and that's exactly what's happened. This thing's bled sideways. Now, why do I say it's not such a bad thing we're stuck at 7? Oh, sorry, I had that on draw. Let's turn off these stupid Yahoo charts. The reason I say that it's not so bad is because we had found support, I think. This is a little bit tenuous because this is really just a series of huge dumps, and this is mechanics, this is shorting, this is what I would call organic price action with rational thinking actors sort of buying and selling based on anything. This is just, algos just slamming people's heads off a brick wall and scooping up the brains with a shovel and throwing it into the recycle bin, as they say in the investment world. I don't know. Nobody actually says that, but that's just sort of what this chart looks like to me. It's very violent. It's very staccato. It's very, frenzied. It looks like when they're on Law and Order and they are asking, like the medical examiner describes, he's like, it was chaotic. It looked like it was a crime of passion. Like this chart looks like a crime of passion. Over here, it looked methodical. It looked like Dexter. You see this like shark tooth pattern, still very severe slopes, but over here, it's just all over the place until this point. And this is a little bit critical, I think, because resistance was here at this aqua green line, and this flipped to support. And then right here after this sell-off, excuse me, let me get you that date. Let me scroll on down. So this is March the 5th, and then we find support at 7. And so it looks like support kind of moves from this aqua line to this red dotted line right here at $7. Pushed it down again, but it quickly recovered to this level. Now, people that are telling us, this is going to retrace, going to go back down to the 5s, pivots, S1s, going to go back down to 4. I'm not buying it. I think Morningstar's fair value just came out again at $13. This is why I think, in a way, it's a good thing we're stuck at 7, because you see this resistance line that's just been pushing down, pushing into this wedge now for, since March 5th. We're looking at over 2 months. This thing has been held up. Let's see, it bounced off 7 once, twice, 3 times, 4 times. I'll call this 5, but even though it, came all the way down, I guess, to, about 660, it recovered back up to 7 the next day. And that was only one day that the stock didn't touch 7. So I find that to be a bit of an anomaly, just, again, shaking people out, smashing your head up against that brick wall and just saying, do you want to give up? Do you want to tap out? Do you want to cry uncle? Do you want to wave the white flag of surrender? My answer, folks, is no. I know Ross isn't surrendering. I know Not a Lurker, certainly not. I know that ether between us never says die. I know Benji is hanging in there. Rook castling. He's got that king protected. Benji always castles. Who else do we have here? We have, looks like Lisa. What's going on, Lisa? It looks like Ross is here. Alex. And that's about it. That's about it. That's about all we've got for you turds. Kimberly's here. What's going on, Kimberly? Good to see you, checking in from Florida. Definitely do not like and sub. Castle early, absolutely. Benji knows how to play. I am terrible. I'm not that good at chess anymore. I was pretty good when I was a little kid. I was on the chess team and stuff, but I'm getting dumber and dumber every single year. As noted by my copious investment calamities. But anyway, guys, I see this as a positive because there's really, if this thing was going to break down below 7, I think it would have done it by now. They've thrown all the FUD they had at it. They spun this ER as much as they can. They're spinning the, convertible note deal as a negative. They're trying to spin anything they can as a negative, but the bottom line is Q2 is halfway over now. We haven't seen the economy or anything else fall apart. I don't think SoFi's defaults are going to get out of hand. I think they're able to predict those and hedge for those and, basically insure against those quite accurately. So 2 months of this sort of brief consolidation right in this channel between basically $7.90 and $7, and it's going to break one way or the other. Why do I think it's going to break up? Because we're at this equivalent point where this thing sort of consolidates. It just looks very mechanical to me. I don't see, like I said, I don't see fundamentally a stock that's, most people have a value from $10 to $13, a fair value, which I think, I think it's worth 13.75 right now. I just don't see this thing selling off down to 4. Institutions are buying. To that end, I mean, if you look at the 13Fs being filed the last couple days, you see Treasurer State of North Carolina, they're holding 425,000 shares. Rumbline, but they actually sold a few, but they have almost 1 million shares increase. This is good. Mitsubishi Kakusai Asset Management. Mitsubishi, huge conglomerate, one of the biggest companies in the world. They're holding 400,000 shares of SoFi stock, and they have banks. They have Mitsubishi's just an absolute giant company. I know their bank is in that top 10 financial institutions that SoFi wants to break into. But that's, again, I'm getting way ahead of myself. I'm all over the place, guys. What else is new? It's un poco mas, basic bitches. And I would like to reiterate the title of this video. I hate you guys. I hate retailers. We're like, you're just a pumper. You're just trying to get people to buy. You're just trying to prop up the stock. Guys, I'm not delusional with my 10 losers who watch this show, like Brooklyn Stock. He's like, I'm obsessed with Brooklyn Stock. You bozos. Like, I love that guy's content. I wish I had his delivery. Anyway, you're stuck with me today, guys. But, the timeline people have on these things is totally unrealistic. Huge amount of shorting again yesterday. If you look at the institutional ownership, guys, continues to creep up. 432 million shares, up to 41%, even with that recent dilution. So you see this number just keeps creeping up steadily. More buyers than sellers. I just want to point out something with regard to timeline. These are two of my, biggest stocks. Microsoft, I've told you many times, my biggest holding. I've been purchasing Microsoft since I was in college in the 1990s. Not, didn't make me wealthy. I'm not wealthy. Just didn't have a ton of it. Just started out with very, very little. But I just want to make a point, what happened after the tech crash, after the Clinton years. So 1999, Microsoft pumps up to the high 50s, goes up to about $58. Tech crash, Microsoft all the way down back into the low 20s. So 10 years later, the stock is at $18. Okay, it was at 58 in 1999. And then 10 years later, the stock is back under 20. Okay, it doesn't break back through 60. It does until all the way out here at the end of 2016. So if you bought here at the pump, which would have been sort of the equivalent of SoFi at, 27 or whatever it would be, you did not get whole again. You did not turn from red to green again for 17 years. Now, I'm not saying that has any application to SoFi. I'm just saying it looks at the timeline of how the market works. Since COVID, since so many returders have got into the market, since payment for order flow, things are happening so fast. People expect to take massive losses or massive gains very, very quickly. People imagine that SoFi consolidating down at these levels from 450 to 8 or 450 to 9 or wherever it's been for the last couple of years is some extraordinary injustice, and that we should all get a Nobel Peace Prize because we've waited for 2 years for our stock. Come on, guys. Life does not owe you anything. Anthony Noto is not your friend. He is my biological father, but that's done absolutely nothing for me. He abandoned me very, very young, and has never acknowledged me. I feel like Spare. I feel like Prince Harry. And by the way, guys, Meghan Markle does not want to be famous. She doesn't want the fame. Okay? She doesn't want the fame, guys. Leave her alone. Stop asking for autographs. Stop hounding her. Stop taking those celebrity tours of Montecito. She doesn't want to be famous. Okay? And she has a new, I think it's a new line of housewares out. It's Grass Valley, jerk-off equivalent. It's like, I want to be Gwyneth Paltrow or that Honest Company girl. What the hell's her name? I don't know. But anyway, I'm just completely sick of those people. Go back to Britain already with that ginger stiff. He's lucky he's a spare. I wish I was a second in line of goddamn royal family. Could you imagine the level of just Karen-ness? I'm so sad. Yeah, fuck you. No, guys, I'm just kidding. I got to be quiet because people can hear me cursing in the office. But I just want to make the point. And then, okay, so from 1999 to 2016, the stock does absolutely nothing. Big goose egg. Okay, and then in the last 8 years, the stock 8Xs. Who knew when that was going to start exactly? You just knew Microsoft was a great company, liked what they were doing. Now, do I want you to have to hold for 17 years to get back to zero? Absolutely not. That's not how these markets are working these days. I mean, the market is moving an awful lot faster. Companies are growing an awful lot faster. Things are changing a lot faster. This change in the dot-com era here, we could be seeing that again in terms of the banking sector. We could see SoFi's growth curve about to explode. And if you look at EPS that they're predicting in 2026, and some analysts are almost there, even some bearish analysts, how do they get there? Okay, they're pulling back on lending. So the financial services is all too predictable. The only way they get there is if management knows what we don't know. And that's that these RFPs are going to bear fruit. These proof of concepts are there, and it's multiples. And I want to make two important points that I heard. I'm lifting off from other Returders, Canadian Returders, bespeckled Returders, who are both far smarter than me. They sell courses. They're high-powered executives. I am merely your humble host, Danny Deals. It's un poco mas. Actually, I think Danny Deals has the day off. It's Danny Vegas, whatever the hell it is. I bought this visor because I got this big pimple on my cheek. And I thought maybe it would, look better or something, but it probably doesn't. Anyway, guys, that's neither here nor there. I don't know. This cheek pimple is just bothering me. Or tongue. Anyway, guys, I thought, I would outgrow my acne sometime before I became, a senior citizen. But life, she is cruel, if nothing else. Cruel, ironic, funny, and you just have to kind of roll with it, guys. But let's just, for shits and giggles, take a look at Amazon. So same thing. 1999, Amazon $5.33. The next time Amazon passes that level is a full 10 years later. Okay, and then you just see the ascent. And then here in 2015, the stock just basically goes parabolic. But to get there, you would, if you started investing when I did in the 90s, the late 90s, when I was, in college, mid 90s, let's be honest. But, these things work in their own time. 2 years is not a lot of time. 2 years is not time to start feeling sorry for yourself. People were asking me, what kind of person should invest? This kind of goes back to that strongman personal finance guy where he says, most people just should not be picking stocks. They don't have the mentality. They don't have the patience. They don't have the discipline. They don't have the research skills. Absolutely right. I hate to admit it, but absolutely right. Benji, I'm a patient mofo, but I sure hope we don't have to wait 10 years to get back to 8. Yeah, I agree, Benji. I think that would be 10 years to get back to sort of that 28 level, which actually would be a 4X in 10 years, which I know a lot of people would be disappointed with. I would not be one of those people. Alberto, Bertie, Aviles, and Lisa are carrying on a private conversation. Ross, don't look a day over 47, but thanks, man. Thanks, Ross. That's eerily accurate. Sailing Cheese. What's up, Sailing Cheese? Hi there. I want to buy a boat, but Sofi stock just won't go up. GME going parabolic, right? Yeah, Uncle Bruce has been talking a lot about GME short squeezing. Let's see, what is GME doing? Of course, we know where SoFi is, just out of curiosity. Let's take a look. Yeah, 12. So, yeah, boy, there it went. What happened? Meme stock surge doesn't appear to be on. It's just, just probably just the apes pushing on the stock. A few other stocks I'm dealing with going up today. A few other penny stocks. GameStop, of course, not a penny stock, but certainly a meme stock. I would hope SoFi is sort of breaking out of that meme stock thing. But anyway, guys, I just want to make a point with the timeline. And then we see SoFi just down for, basically from here, it's okay. it's 2 years. I mean, and other fintech stocks have been doing pretty much the same thing, and the performance has been there, but this has been kind of an awkward 2 years. And I'll make one of the points that, Tanner made in a video yesterday, which is that people aren't really talking about the fact that Galileo was just an acquisition in 2020 and Technesis was an acquisition in 2022. And they've just finished integrating the core of SoFi's business with these companies. First, they had to integrate Technesis into Galileo. Then they had to integrate the entire system, everything SoFi's built on, from banking, credit card processing, the issuance of those, and then, trading, all these other things, all the licensure, all the regulatory stuff you have to build. Integrating all that with Technesis and Galileo in a period of 2 to 3 years, I mean, you've only owned Technesis 2 years, is really extraordinarily fast. And it's extraordinarily good progress. But returders don't want to hear that, because returders are losing patience. Smiley has questions. Like, if you've ever seen Tinker, Tailor, Soldier, Spy, Smiley is just not buying it. Witchcraft, it's a source of mine. I never trusted that little bald fat guy. Little bastard went straight to the minister, went over Control's head, didn't even consult Smiley. What is this? It's an outrage. It's an outrage. Absolutely do not sub and like. Do not listen to Not a Lurker. He doesn't know where he is. He's on bath salts, folks. SoFi was in the pool. Brian, it's a must. Let's go. Right on SoFi. Pays rent. Say my portfolio. Yeah, guys. I mean, you guys covered calls. I mean, look at what the stock has really done. Aside from a few of these pumps and dumps, it's basically been moving sideways for 2 years. So this has been a covered call writer's absolute wet dream here. But again, I think the wedge is there, and I think it's about to break out to the upside. I know I always say that. Look, we had a really nice test of it here just a couple of weeks ago. Stock was trying to push up to 8. We've seen it push up to the upside of this channel now 3 times. And if you know anything about SoFi, it often tests 3 times the upside before it breaks out. Downside is just unlimited. It could bang off this line 10 times. You just never know. Hello and welcome and hello. Mr. Premium of the Option is here. Lisa, of course, we said hello to. M. Russo, hello and welcome, M. Russo. Gus Phillips, this weekend they're starting to teach at the... Yeah, I know. Yeah, they're really actively fighting that. They may get him in some trouble with the government sometime down the road, but I just don't think they're concerned about that right now. They're just trying to sort of keep things afloat so they can get that stock paid out, get to certain, deadlines so they can dump the stock and get some money coming in. But DJT makes, no revenue. It's going bankrupt. It's, it is what it is. It's like, same with Truth Social. It's just not the point. Like, Elon Musk kind of took the, the piss and vinegar out of that when he let everybody back on, X. So, it's just there was really no need, because all the people that were kicked off Twitter, they're about right back on X. So, kind of just took all the wind out of its sails. But in terms of DJT, it's just, it's a nothing business. It makes no revenue. Nobody's going to advertise on it besides the My Pillow dude, and it's just a scam. But it's people are pumping in money, and then the insiders are going to pull all the money out, and it's all going to deflate, and it's just an absolute classic pump and dump with absolutely no product. So anyway, guys, that is what it is. But you have to be a big boy in this market, and you have to sort of understand what you're buying. You have to know why you're buying it. Can't just buy something because somebody's name is on it, whether it's Trump or Noto or Buffett or anybody else. You really have to think for yourself, and that's kind of the hard thing to do. I keep hearing folks go, I'm losing patience. People are losing patience. And I heard that fucking bald asshole Kramer the other night. He's like, how long can I defend the stock? How long can I defend SoFi? The price has been, this way for 2 years. How long can I defend it? He's like, and he even says, fundamentally, they keep turning in good quarters. They keep turning in good results. They keep growing. He's like, I love Anthony Noto. I love the performance, but how long can I defend the stock in the face of this price action? What a dick. What an absolute dick face, cornhole bastard. I mean, just viscerally, I cannot stand that freaking turd salad. But how long can you defend it? It's like the guy from Oppenheimer. How are these guys responsive to price action? What are these guys, lab rats? Do they not see what's going on with the short? Do they not see what's going on with accumulation? These are classic accumulation patterns. It goes down extremely dramatically to stop people out and scare the hell out of people. And then it goes up slowly sideways and they reaccumulate. I mean, what are people not seeing here, guys? Huge decreases. I mean, how many times can this gap down for no reason in the last 6 months? Once, twice, 3 times. And then on these minis, it's like 4, 5. I mean, there hasn't been any bad news. The notion that soft Q2 guidance with fairly strong full year guidance is this huge problem for the stock to sell off, and that, you can't believe that management could know that there's going to be a softer quarter in Q2 and then Q3 and Q4 are going to be much, much better. Of course they know that. I mean, give me a break. Guys, there's a critical difference between losing patience and losing faith. Losing faith in management, okay, sell. Losing faith in the business model, sell. Losing faith in the growth story, go ahead and sell. But losing patience because shorts and mechanics hold the stock down because the macro and the trend and the sector all lends itself to doing that to SoFi because there's so much retail interest. And guys, keep in mind, the reason institutional ownership is so important is because those shares are locked up. It brings price stability to the stock. There's less shares available. This is kind of what I don't understand about, like some of the guys, Uncle Bruce and some of the other guys that keep talking about a short squeeze for SoFi. It's just not going to happen, guys. The cost to borrow is still like less than half of a point. I mean, there's tons of shares out there. There's tons of shares available. I know utilization might say 75% or whatever, but trust me when I tell you, there's absolutely plenty of shares available. They borrowed $1 million today. Cost to borrow average is 0.48%. So this stock is not going to short squeeze anytime soon unless there's something very, very dramatic happens, like a huge, dramatic, earth-shattering event. It's just not going to short squeeze. There's tons of shares available. They dilute the stock every quarter. This stock has to go up based upon fundamentals, S&P 500 inclusion, continued profitability, continued growth. It is a slow, steady climb. The wild card is tech, but that's not going to be fast either. And we might not even know when important things happen. A lot of the Returders are just, scratching their heads and crying and talking about how, the tech side is so opaque. We don't have any data. We don't actually know how the business is doing. All we have is revenues and then, members. And that doesn't tell the full story because, we don't know what's happening. So that's a very fair criticism. Management needs to be far more transparent on that. But, okay, Tanner was talking about, how the tech side of SoFi is just being integrated with the company itself, how we're about to see increased savings internally, and then we're going to see new features rolled out because you had to integrate the whole thing before you can start making new features. Okay? You can't run before you walk. You can't walk before you crawl. There's an order you have to do things. And these giant tech integrations, these giant changeovers of your, like Con Supanusen phone is in systems. He can tell you this stuff takes time. It's not something that happens overnight. But, while that process is slow, the revenue stream, and this is a point that Steve Fiorio made in his article on Seeking Alpha, which I highly encourage you to read, is that these revenue streams from these types of contracts will go on for decades, not years. It's really indefinite. Because the leap of faith you're making, you're putting your whole company's technology platform in the hands of Galileo, in the hands of SoFi. And it's a huge leap, and it's a decision that's going to be made very deliberately and very carefully. But once it's made and once it's integrated, it's not something that's going to be easily undone. It's going to be decades of revenue, and that's how you get that hybrid or tech multiple. That's how you get that valuation that we all think SoFi deserves. Max Payne, guys, today Still $7. Still at $7. Not much to see here. We took a look at that last week. As far as tip ranks, Dolev at 12 with Mizuho. He reiterated. If you see sort of the gravity, sort of the warm, meaty center of these price targets. Again, we just had a Morningstar, I think, come out and say fair value is $13. It's anywhere from $10 to $12. You just see these better analysts 12, 10, 10, 11. Parito's good, but he's 750. And then Hecht is at 12. JP Morgan at 10. Barclays at 10. Goldman Sachs is at 8, but they're still bitter about their Marcus product. And then Ashwin at 11. Deutsche Bank at 11. So you just see these better analysts. You see sort of it lining up, 10 to $12. You see the fair value, $13. And then, you see a couple of the clown car guys still down at $4. But I think that's book value at this point. So valuing a company that's making money and growing pretty rapidly at book value is an absurdity. But if you need something absurd said and you need an absurd man to say an absurd thing, you definitely want to send out the Chia pet. Chia, he'll say anything. He'll just come out, and he's actually giving projections for 2025 that are much more in line with SoFi management in terms of like his Q4 2025 EPS projection stuff. Doesn't make any sense. And keep in mind, just again, these guys, Wedbush, they were a buy on SoFi way back in the day. Like, if you go back, I mean, they're a sell now, but if you go back here to like 2022, I mean, they were buy at $12 all the way down. Buy at 11, buy at 11, buy at 8, buy at 8. And then, now they're a strong sell at, $4 price target. They were telling you to buy at 12, 2 years ago. So I don't know. I guess they changed their mind. It's a woman's prerogative, but I don't know how the Chia Pet got that right. But anyway, yeah, Chia Pet, bologna sandwich, both at 4. But that's really neither here nor there. What else did I want to talk about, guys? This is just one of the things I see with people. Like, think about how you behave when you're driving. Okay, if you're somebody that just drives and you're courteous, maybe you have a chance of picking individual stocks because you have the temperament. If you're a road raging lane changer who the minute the lane next to you starts to move and your lane's not moving, you violently switch lanes and cut the other person off and honk, and then that lane stops, like, at the beginning of the movie Office Space, and then you keep switching. Every time you switch, guys, every time you buy and sell, you are creating inefficiencies. Okay, you are creating frictions, you are creating taxable events, you are creating wash sales, you are creating all these things that cost you money, all these things that destroy your portfolio because you do not have the patience, you do not have the mentality, you do not have the makeup, okay, to pick individual stocks and be patient with them. If you think patience, too much patience is 2 or 3 years, you're not a long-term investor. You're a trader. If that Amazon and Microsoft chart proved anything to you, what is Noto telling you? He's telling you the end game here is to be a top 10 financial institution. Look at those market caps, guys. Even in today's money, you're talking about $130, $140 billion. I mean, SoFi in market cap would have to 18x. That's not going to happen in, 5 years, 6 years. That's going to take 15 years, at least, if we're lucky. 20 years, 30 years. This is the real world we live in, guys. SoFi is not a short-term trade. Yes, I know I pump it and go insane every quarterly earnings, but realistically, guys, I'm not trading options. Realistically, I know what's going to happen. Realistically, I know they're going to attack the stock, and no, it doesn't bother me, guys. I'm not going to be retiring next year. I'm not going to be retiring in 2026. I wish. If SoFi goes moon, SoFi goes rocket ships, all my other penny stocks go moon and rocket ships, of course, I'll be out of here. I'll be on the islands. Me and Princess Jay will be, sipping a pina colada, and you guys can sit and spin for all I care. But I do hate everyone. Thank you, Not a Lurker. I think this thing is basically going nowhere. But basically, if you're the kind of person who's always changing lanes, that's the same thing you're doing with your stocks. You're always buying, you're always selling all the time like a hamster on crack. You're not admitting it to yourself. Look at your account statement at the end of the year. You're going to have a bunch of washes. You're going to have a bunch of short-term stuff. You're not a long-term investor. You're not a long-term investor. And if you're not, admit it to yourself and make a plan that works for you. But don't just keep losing money. Don't just keep panic selling. Don't just keep selling the dip and smelling the rip. It doesn't work. These market makers look for the people that say, I'm losing patience. I'm giving up. This is a war of attrition between longs and shorts. If you lose patience, you lose the war. If you sell below 7, you lose the war. Each individual battle, each peak, each valley, it doesn't mean anything if you're not planning to sell the stock for a long time. And you tell yourself that, but it's not the truth, is it? It's not the truth, guys. Because you can't handle the truth. No, I don't want to break out my Few Good Men stuff. No Tom Cruise today. No Tom Cruise on a Thursday. I just can't take it. He's too short. Man wears a 6-inch heel. 6-inch lift. Still 5'8". Holy moly guacamole. Alberto Berti Avilés used the word hate as subliminal. I love you all. You hear what you want to hear, Alberto. A lot of small regional banks go under. People somewhere, it's going to be good for SoFi. Those regional banks fail long term is good for SoFi. It speeds up the transition to these fintech neobanks. That's what SoFi wants. That's what's happening already. The deposit numbers prove it. People are switching to SoFi. Organic recognition of the SoFi brand is going up. People are extremely happy with SoFi and all the surveys, all the ratings. SoFi is building a better mousetrap, one day at a time, one product at a time. Now that we're fully integrated Technesis, Galileo into SoFi, working with adding new external customers, you are going to see new features coming online. People are waiting, and with good reason. A lot of members just don't think SoFi's innovating in-house fast enough or innovating at all, and I agree. But we're just not seeing the integration going on behind the scenes. We can't see all that. There are growing pains there, and they made it happen quite smoothly. Very little downtime, considering everything they've been doing. Judging a company by the stock price rather than its performance is just a fool's errand. Charlie and Warren will tell you that. So you're basically integrating SoFi with the tech side. It's a whole new company. It's a whole new animal. This company was only invented 4 or 5 years ago, out of the ashes. And rising out of those ashes like a phoenix is this company that is absolutely killing it. The growth is there. I know Affirm, I know Hood just had a really good quarter, but Robinhood's all over the place. If you're a long-term investor, it's a great trade, but you never know what you're going to get quarter on quarter, and then the government is just suing them for their crypto business. I think crypto companies that rely heavily on crypto are short for this world. And I think Noto and team made a very, very wise decision when they went for the banking charter over the crypto. You can't do both. And I think long-term, their decision to go for that banking charter and become a bank is going to prove very, very smart and very, very timely. So, guys, what else do I have for you? Yeah, Amazon, again, stalled for 10 years. Microsoft stalled for 16 years. SoFi's been stalled from 4 to 8 for about a year, and then stalled, from 7 to 9 or whatever it is, 6 to 9 for 6 to 10 for another year. So it's just not much, guys. If you're losing patience, I feel for you. Get out, put your money in ETF, put your money in an index fund, put your money somewhere else. Just don't make financial decisions based on emotion. And losing patience is basically an emotion. If you believe the stock is undervalued, the fundamentals will catch up. Eventually, it's a weighing contest. It's not a popularity contest. It's not even a popularity contest right now. It's mechanics making money off weak retail investors. That's all it is. You stop setting stop losses. You stop dumping. You hold shares. You buy dips. You sell covered calls. Bing, bang, boom. Done deal. Guys, I got to go. I don't know what the hell I've been talking about this whole time, but anyway, that was something. I don't know what the hell it was. But, we're green. We're green. It's not easy being green. Just ask Kermit. Miss Piggy won't give him the time of day. And when she does, it's just a lot of complaints. But anyway, guys, I want to thank Not a Lurker, J Money, for producing the show today. It looks like it's 1 o'clock. Things just ended, yeah. So we're up a penny. Ooh, 706 on the day. Just anemic, horribly low volume. 22 million shares traded. Give you a final check of the live short interest. I think Ortex kicked me out here. I don't know why. No, there it is. So 1.1 million on the day, guys, net borrowed. So we're back to we're back to that old song and dance. 22 million shares. Don't know why the volume was just so low today, but traders just totally sat this one out. And obviously, it's because they sold all those options. And, you know, I don't know why retail keeps feeding money to these folks, or why retail would keep buying the stock and selling it over and over and over again at a loss. But I guess that's just what retail does, because